Hey everyone, if you've ever looked at the market and just felt overwhelmed by all the noise and conflicting signals, well, you're definitely in the right place. Today, we're going to break down Harsh Vardhan's MSTRM Framework. It's a really comprehensive system designed to bring some much-needed structure and clarity to the chaos of trading.
So let's just dive right in with the big question, right? Why is it so hard for most people to be consistently profitable in trading? Turns out, it often comes down to a few very common and very human traps. First up, we've got something called operator traps. Okay, picture this. A stock suddenly explodes higher on massive volume. There's good news everywhere. It looks like a total sure thing. So you jump in, right at the peak, and bam, the price immediately reverses. These moves are often pure hype, and they're almost perfectly designed to trap eager traders. And then there's the classic, analysis paralysis. You know what I'm talking about. You've got 5 different indicators on your screen, your RSI, moving averages, MACD, and every single one is telling you something different. So what happens? You're completely frozen. You can't make a call, and you end up missing the move altogether.
Oh, and this is a huge one. Chasing the winners of the last bull market. It's so tempting, right? Traders see that, say, the chemical sector went up 10 times in the last cycle, so they just pile in, thinking it's going to happen again. But you know what? The market almost never crowns the same king twice in a row. So the real question is, how do we get out ahead of these problems? This is exactly where having a system becomes so critical. So today, we're going to walk through the MSTRM framework. We'll break it down into 5 clear parts to show you how it provides a solid roadmap to navigate all these challenges.
At its heart, the trader's dilemma is really about not having a complete system. And when there's a void like that, it gets filled with emotion, with gut feelings, and with what Harsh Vardhan brilliantly calls hope investing. You know, when you're just clinging to a losing stock, hoping it'll turn around.
So the solution starts with this really powerful idea, fusing 2 different worlds of analysis. Instead of getting stuck in the fundamentals versus technicals debate, this framework says, hey, why not combine the strengths of both? That way, you get a much more complete picture of what's happening.
And here's how they perfectly balance each other out. Fundamentals give you the why. They tell you why this is a great company, and that gives you real conviction to hold on. But then, technicals come in and give you the when, pinpointing the exact time to get in, and just as important, when to get out.
So this whole Techno-Funda idea is built into a super practical, repeatable system, the MSTRM Framework. The best way to think about it is like a pilot's pre-flight checklist. Before you ever put your money on the line, you go through every single step to make sure all systems are a go.
And here they are, the 5 pillars of that checklist. Each letter, M, S, T, R, M, stands for a critical piece of the puzzle, and each one builds on the last. It's a system that takes you from the 30,000-foot view of the market all the way down to your own psychology.
All right, let's get into the first 3 letters, M, S, and T. You can think of this as the offensive side of your strategy. This is the engine that helps you find the right stocks at exactly the right time. So, the first step, M for market, is all about knowing which way the overall wind is blowing. For this, the framework uses a simple but really powerful tool called the Rate of Change Indicator, or ROC. It basically helps you figure out if the market is healthy enough to be buying aggressively or if it's a time to be cautious and play defense. Then look, this isn't just some vague theory. The system has very specific back-tested rules. For India's Nifty 50 index, for instance, you look at the 18-month rate of change. If that number is down near 0, it's a sign the market hasn't gone anywhere and is probably undervalued, a good time to buy. But if it's getting up near 45%, whoa, the market's gotten way too hot, way too fast, and it's probably time to sell.
Okay, so once we know if it's a good time to be in the market, the S for sector tells us where we should be looking. The whole goal here is to find industries with a massive tailwind at their back. You know, some big fundamental force like a new government policy or a tech breakthrough that's just pushing that entire sector forward. And finally, T for technicals. This is where we zoom in on a specific stock. You found a healthy market and a strong sector, but now you need the perfect entry point. The framework uses patterns like the volatility contraction pattern, or VCP. It sounds complex, but it's just a chart pattern where a stock's price swings get tighter and tighter, like a coiled spring, suggesting all the sellers are gone and it's about to pop. It gives you a low-risk spot to get in with a clear exit plan.
Now, having a great offense is one thing, but it's a rock-solid defense that keeps you in the game long enough to actually win. And that's where the last 2 letters, R for risk and M for mindset, are absolutely critical. Think of these as the guardrails for the entire system.
The most important rule for risk management is dead simple and non-negotiable. You never, ever let a single trade lose more than 10%. That's not a guideline, it's a hard and fast rule. It's the one thing that protects your capital from those huge, catastrophic losses that are basically impossible to recover from.
And this brings us right to the final pillar, mindset. This quote just nails the single biggest mistake traders make. The moment a trade goes against you and you ignore your stop loss, you've just thrown your plan out the window. You're not a trader with a system anymore. You've just become an unwilling investor who's running on pure hope.
So let's put it all together. The market cycle tells you if it's a good time to be on the field. Sector analysis tells you where the strongest teams are playing. Technical analysis tells you the exact moment when to make your move. And risk management and mindset, those are the rules of the game that make sure you don't get taken out for good.
And that really leaves us with one last thing to think about. A framework like MSTRM is such a powerful reminder that in the wild chaos of the market, having a disciplined system is almost always more reliable than just going with your gut. So take a second to think about your own approach. Which one are you really leaning on more? Thanks so much for joining me for this breakdown.